And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes, brought to you by ABSA CIB, proud sponsor of the Bonds, Loans and ESG Africa 2025 conference from the 25th to the 26th of March at the Cape Town International Convention Centre. Good evening, welcome to the programme. I'm Stephen Grootes. Been thinking a little bit about cannabis, haven't you? And just considering that quite around about this time last night, the presidency put out a statement that effectively unbanned cannabis products that had been banned just the week before, when the Health Minister, Dr. Motsoaledi, issued a gazette saying that these products were now not allowed to be sold in the Republic. Then the presidency, just went ahead and basically unbanned them. There are a couple of really important points to this. The first is that there was no public consultation when these regulations were first promulgated by the minister last week. He's been overturned by the presidency now, but imagine being involved in that business. The second thing, and I think it's important to say this, I can think of no other industry that would be treated in this way. Basically, you're banned through regulation with no consultation, then unbanned a week later. I do wonder if someone sort of whispered in someone's ear and said, look, this probably isn't legal. I think it probably wasn't. But it also gets to the heart of government's issue around cannabis and policy. When the Constitutional Court, 6 years ago now, 2019, just before the pandemic, said that in fact the personal consumption and the personal possession of cannabis in your own home, broadly defined that, is legal, government was supposed to create a policy. And the policy, it seems to me, has been very restrictive. Now, I'm not someone who sort of flies the flag for cannabis in any particular way. It's not my choice of poison. But I can't help but feel that the policy that we've seen, the way it's been treated, has not been rational. On the one side, you've got minister after minister, person after person saying we must grow our cannabis industry. On the other side, you've got a minister just going and banning it because he kind of feels like it, and then that being overturned. As I say, I can't see any other industry that would be treated in the same way. COSATU today adding its voice again to those who oppose an increase in VAT. And I made the point yesterday, I can't think of anyone who's actually supporting the VAT increase that government wants to implement as part of the budget. It's a bit like having everybody in a room and only one person actually has to take responsibility. Only the person who actually has to pay the bills wants the VAT increase. In this case, that's sort of the ANC and sort of the finance minister, Ino Korongwana. And this really shows you the problems that actually we have. I can't see anyone who's going to go and join the ANC, join the minister and say, we will support the VAT increase. This leads to all sorts of implications, but the longer it goes on, the bigger the problems I think we're going to have. Your views on that, be good to hear your views on cannabis as well tonight. Dacha, is the way we're treating that industry really rational in any way? 011 883 0702 021 446 0567 and voice notes this evening on 072 702 1702.
702. Stephen is on The Money Show.
6 to 8 p.m.
Well, you heard yesterday the group Retailability now selling the brands Legit, Swagga Style and Boardmans. They're going to Pepkor. Yesterday it seemed Pepkor not necessarily disclosing the price, but widely reported now it's costing around 1.9 billion rand in cash. It does mean Retailability will keep brands like Edgar's Red Square, and quite a few other important ones. The CEO at Retailability is Norman Drieselmann. Norman, good evening. I do appreciate the time. Thank you. I think you first started talking to Pepkor, if I remember correctly, back in 2023. Did this deal take a little longer than you would have liked?
Yeah, I think the original conversations were looking at the whole company being purchased. And as time morphed on, I think both them and us realized the changes that needed to take place to the deal for it to be optimal for all shareholders. And that's where we landed.
Okay, so you started with a bigger deal and ended up with a smaller one. What is it about the brands Legit, Swagga Style and Boardmans that makes you happy to sell those and not the others?
I think those businesses, particularly Legit, Swagga and Style, we've put a lot of hard work into getting them the business models optimal for growth strategies. And I think it makes a lot of sense to go to a business with a big balance sheet like Pepkor for mass rollout and expansion to really capitalize on those brands in the marketplace. I mean, they're all nicely positioned in the value segment, and the value segment is what's working very well out there at the moment. And it's really probably the best thing for those businesses.
Boardmans is slightly different, isn't it? I mean, I think it's online only now. It's a sort of more upmarket homeware. That is different to the other brands. Any specific reason why Boardmans is part of this deal?
Yeah, I think, again, for us, we don't have the resources to apply into trying to build a home business. I think we wanted to keep Boardman's brand alive till we had finished the Edgar's turnaround strategy. And Pepkor, the view that they can take it and really run with it. So it's a good acquisition for them, and I'm sure they'll do it justice.
Did you specifically want to get Boardmans off your hands? Was that a condition of the sale?
It was just the 3 specialty or the 4 specialty formats that worked for them.
Okay. You've got some of the other big brands. You've mentioned Edgar's, Red Square. There are a few others. Edgar's, of course, a household name for many, many years. Are you going to keep going in the same direction as you have been? I mean, now you've got sort of these brands off your hands. Is it going to allow you to concentrate a little bit more on the others? Is there any kind of change of direction in mind? Or are you just going to concentrate on the same direction that you've been taking them in?
Yeah, no major change in direction for us. I think what the focus is going to allow us to do is to speed up the execution of the various strategies that we have. The repositioning of Edgar's more into the value segment, trying to get more into the mid-tier pricing to hit the mid to low-tier market. From a fashion perspective has been key to us, cementing the beauty side of the business and making the stores smaller. They were just way too big for the offering and for the market where it is today. So we're continuing to give space back to landlords as part of that right-sizing strategy.
I mean, it's the second time in this conversation you've sort of mentioned that lower cost fashion may be doing better. Is that where you see the market is heading? You're moving away from the higher cost, higher end. Is that just where the profit is going to be in the lower cost segment?
Yeah, I think customers are really responding to value. And we're seeing it in two real places. It's just a simple raw retailer. We're seeing that lower price point products are definitely gaining more traction. When you look at my peers out there in the retail space, the more value they put on the table from the customer, the better their top line performance has been over the last few cycles. And we're seeing shifts in month-end patterns that you're needing all the month-end bill runs to take place before we actually see a lift in sales coming through on a monthly cycle. Both those factors are telling us there's a cry for value amongst the consumer.
There must be a point at which you should not go lower, because if you go lower, you end up competing with Temu and Shein, and I presume you'd want to avoid that.
Yeah, no, I mean, we don't want to go into the absolute discount space. I mean, Edgar's is still an aspirational brand, so it's really positioning in the mid-tier price point range that's working for us. Backed by the investment into private label as opposed to over-representation of international brands in the format. The private label allows us to charge, more mid-tier pricing while giving the level of fashionability the consumer wants,
I mean, lots of evidence consumers are under pressure. You've referred to it as well. What kind of impact is that having on the whole clothing industry at the moment? It's clearly helping you decide which direction you're going to go in. And I'm afraid to say this, but certainly for the medium term, I don't really see a big change in consumer sentiment coming. I hope I'm wrong.
Yeah, I think we all hope you're wrong. But it's not a strategy. So I think we're acknowledging that if you do put value in front of the customer, you will get the response and you'll get the market share gains. I agree with you. I think we're in for a tough 18 months.
Norman Drieselmann, thank you very much indeed. Really appreciate the time. The CEO at Retailability.
The Money Show on 702.
Monday to Friday, 6 to 8 p.m.
Well, you may remember at the start of the year, the first story started to emerge about 100 billion rand Transformation Fund, supposed to see money going from business into the fund to be managed by government to be paid to essentially black businesses. The point is to encourage black businesses. All the people who manage the fund, it would seem, would actually be appointed by the Minister in the Department of Trade, Industry and Competition, Parks Tau. We've asked him to come on the program several times. So far, no luck. We'll keep asking. We have been told by Alan McCorkey from the SA Chamber of Commerce and Industry, one of the many business groups that oppose this, it would not necessarily be a new tax on business, merely a sort of reallocation. Some of that is contested. Other business groups say they'll fight this tooth and nail. In Business Live today, the chair of Grootes, Dr. Stuart Theobald, suggesting the fund shows that our BE policy, or our transformation policy, if you prefer, perhaps more accurate, suffers from what he calls inputitis. Well, Dr. Stuart Theobald is in our studio now. Stuart, good evening. Nice to see you in our studio. Inputitis sounds quite serious. What is it?
It's a disease where you're only thinking about the inputs that are going in instead of thinking about the outcomes that are emerging from the end of your process. So when we think about BEE policy, it's really about transformation. It's about how do we address the legacy of our history. And we should be able to focus on that particular problem and to implement policy that is going to deliver those solutions in the most efficient way possible. But instead, when you look at how BEE is done in practice, it's really about how much money we're going to spend. So companies will allocate certain portions of after-tax profits or revenue or payroll towards earning points through the BEE scorecards. And what they're measured on is how much they put in. They're not measured on the impact that they actually have in delivering transformation. So my view is the concept of the Transformation Fund, as it's been articulated so far, is really an extreme version of the same thing, that we're talking about spending a lot of money, and we're not talking about what outcomes, what effect, what impact we want to achieve in spending that money. And if we start with things the right way around, we should start by really analyzing the problem we're trying to solve, and then find evidence that solutions will deliver that, solve for that problem, and then work out what it's going to cost us and find the most efficient way to deliver those solutions. That's how we should be thinking through policy logically, instead of starting with a big number and leaving it very vague on the details on what exactly we're going to do with that money.
I mean, if you look at various policies over the years, I remember government said it was going to create 200 black industrialists. I'm talking about probably 10, 15 years ago. I don't necessarily see evidence that worked. Have we basically just got things the wrong way around? We've got to start with what works before we start putting money into it, and especially when people don't have a choice in putting the money into it. They have to do it.
Well, BEE is often confused, I think, that BEE at heart is a voluntary process. So companies can choose not to adopt BEE. They can be non-compliant with the Act. And that means that their ability to function in the economy will be constrained. They won't be able to do business with government because their status as procurement partners would be very weak, as well as with other large companies who are trying to boost their performance by who they procure from. But fundamentally, it's a choice of the company whether they're going to be compliant with the legislation or not. Now, if you are going to be compliant, it's a balanced scorecard. There are many elements within it that you can improve your performance. One of those elements is enterprise and supplier development. It's a very important one. And you should be allocating about 3% of after-tax profit if you want to get full points from your enterprise and supplier development activities. Now, for companies who are aiming to achieve that target and use that element of the scorecard to boost their overall performance, it's necessary to spend the money. But there's no rule, and I think this gets confused in the conversations about this. There's no law that says that they have to. It's conditional. If they want to achieve a certain status, then they have to.
The other thing that gives us such big headlines is the figure, 100 billion rand. And this is a strange thing to say. Spending 100 billion rand is actually quite hard to do.
Yeah, absolutely, especially in enterprise and supplier development. Now, when you look at the research on how companies start up, how they perform, how they scale, it's hard to do. Over 70% of new startups in South Africa fail. If you look at all of the interventions that have been mounted by government over the years to try and support particularly black-owned businesses to become established, to grow, to be sustainable, they're very modest in the impact they've been able to have. So I think of things like the National Empowerment Fund, which was started back in 1998. It now has a loan book of about 2.4 billion that it's been able to build up in that time. And it sits with excess cash. It actually can't find the opportunities to lend more. We have other examples in the private sector, like Business Partners, which has been around for over 50 years, as perhaps the most successful example of active interventions. And it's a joint venture between public and private. And it only has a book of about 3.4 billion. So you can see it's really hard to get scale. And when we talk about a number like 100 billion and a cash flow of 20 billion per year, I don't think anyone who's been involved in enterprise and supply development can see that as a remotely possible amount of money to deploy into the South African economy, into the enterprise and supply development. It's just impossible. And the binding constraint is not only finding opportunities to lend that money, it's the non-financial support that you need to bring along with it. And for small companies to become sustainable and successful, they need lots of mentorship and support on how to access markets, how to build the capacity in their businesses and so on. It's not about the money alone. And when you look at what constrains the growth of other interventions that are supporting development of companies, it's the lack of mentorship skills that's the bigger constraint. So just putting 100 billion rand on the table is very far from solving the real problems that need to be solved if we're going to scale up black enterprise development in the country.
When I first heard the idea of a 100 billion rand fund, I thought, I don't think this is going to happen. The minister seems absolutely determined. I realise that there are some issues like the NHI that are useful for all the parties concerned. The ANC and the DA love the NHI. It helps them with their constituencies. Is this going to become a big political issue? Do you think it's actually going to happen despite what business is saying? And business is determined to stop it.
I don't think it will happen. If you look at the concept paper that was published last week, it simply does not have the evidence that this approach is good use of scarce resources. There's a lot of activity happening in enterprise and supply development. Big companies, big mining companies, big banks, big retailers have all created their own enterprise and supply development programs where they can develop businesses and actively integrate them into their supply chain so they get access to markets. Those examples are actually quite successful. Why would we want to potentially disturb successful models for an unproven idea that has delivered absolutely no evidence to support the fact that it'll work? So I just don't think there's any evidence on the table that this particular concept is a good one. And we've got to be careful. There's a temptation in public policy for institutional inflation. So whenever there's a problem, I'm just going to conjure up a new institution that's going to solve the problem. We never actually put institutional failures out of their misery. So the State Bank is another good example. Why we're not going to fix Postbank or improve the performance of DBSA or IDC or any of the other existing public entities that are involved in banking activities. We're not going to go to the hard work of fixing the institutions and getting them to work properly. We're going to conjure up a new one. And we're seeing exactly the same thing here. We have the Small Enterprise Finance Agency. It's already an existing DTI institution. We have the National Empowerment Fund. We have various other provincial level interventions and so on. So there's lots of activity across the public sector in trying to support enterprise and supply development. But we're not going to do the hard work of actually fixing and scaling and solving the problems that constrain the growth of those institutions. We're going to conjure up a new one. So it's a classic example of public sector institutional inflation that just as a public policy position, we should really resist.
And particularly during a time when we haven't agreed on a budget and people are looking for things to cut. Dr. Stuart Theobald, Chair at Grootes, thanks very much indeed for coming in. 26 minutes after 6.
The Money Show.
The Market.
Chantel Marks is Head of Equity Research at F&B Wealth and Investments. Chantel, good evening. News out from Metair today. They've booked a big loss. Was broadly expected.
Yes, absolutely. I mean, they've now come through a few difficult years. 2024 was another difficult period for them. So prior to last year, they actually extensively retooled most of their businesses for new range models at the original equipment manufacturers, the big car makers. But volumes have been very disappointing because of global macro pressures and generally lower demand for new vehicles, and then the port issues in South Africa kind of compounding that. They've also had a very problematic business in Turkey that they've now exited. So I think that they're actually moving into a period of rebuilding now. They've relooked at their cost structure, doing a lot of work there. They've refinanced their debt. And I think things could start looking a little bit better for the automakers in the next year. So very difficult period, very much expected. Here's to hoping it improves next year.
An interesting statement out, quite a short statement on Sense this afternoon about Metrofile. They've received an offer for the company.
Yes, so Metrofile is a document warehousing company. They used to have those big boxes that stood around at big companies, and they take the files and they put them in warehouses. They've now moved towards kind of cloud solutions, but I think competition there has been extremely tough. So it's been very difficult going for the company. They've tried to expand their footprint to the rest of Africa and the Middle East with mixed success, but they're in a position where it's starting to get really difficult to go at it alone. So I actually think it's a really good thing for them. The share price reacted very positively as well. Hopefully someone buys them.
De Beers is fascinating at the moment. Obviously they're going to come out of the big group. There's a potential listing. I would have thought, though, that maybe, there would be other options. Maybe someone would buy De Beers. They've had a sort of monopoly on diamonds for over 100 years.
So the diamond market is in a very difficult position at the moment. We've had volumes coming under pressure overall for diamonds over the last few years. I don't know if that's a function of people just going off diamonds a little bit, it not being that fashionable, less people getting married. I think that could also be having an impact. And then, of course, the market has been upended by lab-grown diamonds as well. So natural diamond producers like De Beers have really struggled, and that puts them in a very difficult position. So it's very difficult for Anglo-American, I think, at this point in the cycle to actually find a buyer, to find someone who believes in the De Beers story longer term. The only option that they have outside of that, because they've promised investors they're going to get rid of it, is to list it and perhaps unbundle it to existing shareholders. We've heard that they are talking to banks about it at the moment, and I had a quick look at what we could possibly look at as Anglo-American shareholders, and the company currently is carried at a $4.1 billion book value. That's on an 85% basis, right? So that values the company at about $4.8 billion. It would be by far the largest diamond miner listed in the world. But if you look at where other diamond miners are trading, 50% discount to their book value. So that puts it at around $2.4 billion. And that translates into about 28 Rand per share in Rand. So that's about 5% of the current value of one Anglo-American share. It's something. It's not great, but it's something.
No, sure. I mean, fascinating to watch how that works. Industrial diamonds are coming in as well, by which I mean industrially produced. And very quickly, I mean, Amplats, they were the sort of stellar performer today. Rhodium prices are still high, but platinum prices themselves aren't moving yet, despite what appears to be lower inventories of platinum.
Yes, so it's been very interesting to look at the underperformance of platinum and as well as palladium over the last few years. And I think that that's been a function of weakness in the auto sector. So very similar to what we've seen out of NetAir. Of course, platinum and palladium is used in the catalytic converters that go into cars. So if car demand or vehicle demand goes down, so does demand for platinum and palladium. Of course, the electric vehicle story also is playing a role there, but we've seen a little bit of movement in that price because of that deficit coming through. Interesting thing about Amplats, though, we've seen them doing quite well over the last couple of days, kind of outperforming, but they've been the notable underperformer from peak kind of PGM pricing in 2022. So perhaps playing a bit of catch-up there, the Anglo overhang starting to fade, and they had a capital markets day on Monday, which was probably quite well received.
Chantel Marks, thanks very much indeed. Head of Equity Research at F&B Wealth and Investments.
The Money Show
with Stephen Grootes.
Well, you know the number 011 883 0702 021 446 0567. You might well have a view about cannabis, the way government is managing the cannabis industry, as opposed to the way government says it wants to manage the cannabis industry. An astonishing set of events over the last 10 days. Last week, the Health Minister, Dr. R100bn, gazetting a set of regulations that effectively outlawed the sale of pretty much all cannabis products. It was an astonishing thing. Then, last night, the presidency issuing a statement saying that those regulations had now been withdrawn. In other words, they're gone. Cheers, forget about it. It does seem that the president forced the minister to backtrack. I must just point out, and this will be important, the minister had not, this is Dr. R100bn now, had not had any provision for public comment or consultation, which, as I understand it, you have to do when you are publishing a regulation. Vanessa Jarvis-Findley is the founder of Naked, a cannabis cafe in Clarence, one of the people involved in this industry. Vanessa, good evening. I mean, let me use the phrase, this whole thing looks like a little bit of a mess. When you first saw the regulations last week, I presume you thought, well, this is the end of your business.
Good evening, Stephen, and thanks for the opportunity for giving my 2 cents worth. I am the owner and the founder of Naked Cannabis Cafe in Clarence in South Africa. And yes, I was really shook last week when I received the news that it had now been gazetted, nogal, that we were no longer allowed to sell cannabis products that were in foodstuffs, which is obviously a huge part of my business. So for the last 10 days, it's been a bit of a scramble. It's been educating my customers, most importantly. Everyone's phoning, messaging, oh my goodness, can we get our medicine? What's going on? I think what we need to bear in mind here is cannabis isn't just a feel-good plant or a natural remedy. It's an economic disruptor, Stephen. And like all disruptors, it's making the incumbents nervous. Okay.
So I was going to come to that. I mean, do you think that informs what government has been doing? Is there maybe an inherent sort of conservatism in some parts of government? And I can understand that. This is a big change in society. But do you think that's what's happening?
A little bit. Also, we've known for years that legal cannabis correlates with reduced alcohol consumption, particularly in the younger generation. Several studies confirm that the shift. People are choosing cannabis over cocktails, and not just for social use, but for managing stress, anxiety, pain, and even sleep. So let's not forget, big alcohol and big tobacco aren't just old giants. They're skilled operators with decades of lobbying experience. They've built entire ecosystems of influence to shape legislation, sway public opinion, and quietly protect their interests. And this is where I feel is the stem or the root of this problem.
Right,
and why now? Yes, why
right.
now? Yes.
I mean, Vanessa, look, on analysis, I find it hard to disagree with you. I'm sure if they were here, they'll demand evidence, but we can have that conversation another time.
Sure.
Let me put a different question to you, because it does seem to me that governments actually had problems with regulations about this. I mean, first they said that, yes, they would comply with the Constitutional Court order. You could have some dacha in your possession, but only 4 plants, where I can go home and literally cover my entire property in alcohol if I want. What would, for you, be a rational cannabis policy? I mean, any regulations would have to regulate how cannabis is sold, and I think that would be rational.
Absolutely. Thank you for the opportunity to answer this. How I have modeled my cannabis cafe in Clarence is I use a responsible adult use. So as long as you can prove that you're over the age of 18 and you've had a consultation with one of my qualified cannabis consultants from the Sheba Cannabis Academy in Johannesburg, that we are then dispensing the correct medicine for what your complaint is, whether it's for medicinal use or recreational use. I feel that we've set the example from the word go as being one of the first cannabis cafes that opened way back in 2019. We set the standard. We have never had one complaint about us. We have never had the police visit us. We have never had parents arriving and saying, oh my goodness, my children are in this state, XYZ, because we have adopted international standards. Responsible adult use. I mean, hemp and cannabis food products do not pose the same health risks as alcohol, tobacco, or ultra-processed foods that are widely available in every supermarket. The wellness, health, and plant-based food sectors have demonstrated that the cannabis-infused products can be responsibly manufactured and consumed, particularly when local entrepreneurs are empowered with fair and informed regulation.
Vanessa, thank you. Vanessa Jarvis-Findlay is founder of the Naked Cannabis Cafe in Clarence. Listening to that, Myrtle Clark, Director of Fields of Green for All. Myrtle, one of what was known at the time as the dacha capital, a couple, unfortunately only one of them still with us, but 2 of the people who went to court and won the original Constitutional Court ruling. Myrtle, good evening. Good to talk to you again. We used to speak years ago about this. There's a lot we can say, but I cannot imagine any other industry could be treated by government like this.
Oh, hello, Stephen. Yes, and very nice to talk again. I have just had so many flashbacks to that amazing 5 days that we spent at the Pakisa in May 2023 in a hotel north of Pretoria. It was a very tumultuous 5 days, but we were all there, including experts and legal experts and economic and medical, and everybody was there. And after the 5 days, we were exhausted, but we were satisfied that we'd been heard, that we could sit round tables, that we could discuss all of the contentious issues. And now, just short of 2 years later, we get this. I just think that in terms of the bigger picture, it is our human right to make a living and to consume something that is not going to necessarily harm ourselves or harm other people and whatever. There's also the bigger picture questions that the government are not looking at. They're looking at the nitty-gritty of the children in a dacha cookie. So we've got this huge chasm in between the reality on the ground and the bigger picture that we should be following our constitution.
I mean, in the end, if you've got people in power who do not want to do something but are being forced to do it by the courts, they might well fight it every step of the way. Now, let me just be clear. It could all change. The attitude could change. There's no reason why it can't. And particularly as, you know, the political situation is quite fluid. Do you think this is now going to lead to a sort of long, grinding court battle one way or another? 10 years' time, you're still going to be consulting lawyers?
Well, I certainly hope so. I hope not, Stephen. You know, we are very litigation wary. You know, there's been court cases going on up until the last one that we were actively involved in was the Labour Court. Of course, as a last resort, we'll go back to court. But the amount of time that we've spent in the presence of government ministers and the highest officials who've agreed with us with so many things, I'm not in a hurry to rush back to court. I know there were a lot of parties over the last 2 weeks that were rushing to court, consulting lawyers, but at the end of the day, we need a negotiated solution to this. And the only solution is to present the evidence. Because the evidence has never been heard. You know, Jules and our case was cut short in 2017. The Constitutional Court only ruled on privacy. So there needs to be some sort of government platform where we can show them the evidence. No children have ever died from ingesting dacha cookies ever. You know, that's just a fact. But then the media reports of various things and it gets taken out of context, and dacha always gets blamed if there's some dodgy food, and it just becomes this petty little thing that results in things like this Department of Health regulation that came out. So it's a big fat mess, but all the solutions are there. Myrtle. They just need to be heard.
Myrtle Clark, thank you. Director of Fields of Green for All.
The Money Show with Stephen Grootes, brought to you by ABSA CIB, proud sponsor of the Bonds, Loans and ESG Africa 2025 conference.
6 minutes to 7 the time. Well, I don't know how you're feeling about the future at the moment, whether you're feeling, in fact, your future is going to be better than your present. There are plenty of reasons, I'm afraid to say, why you probably shouldn't be feeling very confident. I mean, EWN bulletins are full of stories about Trump's tariffs, the problems we have around our economy, growing our economy. Underneath all of that are long-running social issues. Now, this week, F&B said South African consumer confidence was dropping to its lowest level in 2 years. Emile Duplessis is the executive head of behavioral economics and economic insights at Standard Bank. Emile, good evening. Really appreciate the time. Thank you. I mean, if you look at the headlines, if you listen to one news bulletin, no surprise why we're not feeling very confident at the moment.
Hi, Stephen. Greetings to you and your listeners, and thank you for having me. Yeah, I guess that's pretty much what we also see in the numbers. You know, consumers are quite uncertain around their finances, around the economic outlook, as well as the future. And I think it's very important for us to try and understand what are those factors sort of underlying and influencing consumer behavior. And how do we try and improve on consumer behavior? How do we try and create a better picture?
It can be so difficult to work out what factor is causing, you know, what kind of sentiment. I mean, for many people, it's about Trump and just general sort of perception of instability. But that's really about our economy. And then the thoughts about our economy are completely intertwined in Trump. And that's just a pretty simple and topical example. I mean, there are many others. To try and work out what is causing people to feel in a particular way and to isolate elements must be close to impossible sometimes.
Yeah, pretty much. But so what we do within behavioral economics is we look at the psychological and the contextual factors that influence financial decision making. And we find that there are various concepts, for example, loss aversion that plays a role, or the certainty or uncertainty, trust. These elements all play a role in terms of how consumers feel. And we try and narrow it down to the sentiment. We try and narrow it down to how consumers perceive the economy, perceive their own finances. And I think, you know, it explains to us a lot in terms of, you know, what consumers will then do from a behavior perspective. Because we do know that there's a very strong correlation between how consumers perceive their own financial position and the economy, and then how they then thereafter make decisions. And so it's so important to really take a deep dive into the behavior of consumers and the mind of consumers, and trying to understand the contextual factors and how these all play a role within the decision making of consumers as well as businesses.
Are there many levers that can be pulled? And I'm really, in a way, about to stray into a sort of advertising question, because that's what advertisers try and do, is pull that lever. But when I think of sort of governments, governments sometimes have a responsibility to give people confidence in their economy. And there are one or two cases where I think people have, almost talked their country out of an economy. I mean, Britain in the 1980s, late 1980s maybe, out of a recession rather, in the early 90s. But are there levers that people can pull to improve confidence? We can't control what the Trump administration will do. We could still probably find a way to encourage people to feel a bit more confident.
So I'd say there's a couple of things that we could do from a confidence perspective. And certainly confidence plays a very large role in how consumers and businesses behave. I mean, if you think back where we were in January, for the first time after 10 months, we had sort of load shedding kicking in again. I think that had quite a confidence knock, consumers having to sort of deal with the inconvenience, businesses having to face the inconsistent power supply. And then there's also, queries around the flow of foreign direct investment and domestic investment, especially given that these are intrinsically linked to sort of long-term gains. And then I think at the same time, what we also have at the moment is the potential hike in taxes, and these things all weigh on the consumer sentiment. It weighs on consumers' decision making in terms of purchases. It weighs on businesses having to review their investment. So I guess the kind of things one could look at certainly would be around trying to improve these elements, like, for example, load shedding, give more certainty. Both from electricity provision perspective, but also from a budget perspective. We know the budget is still ongoing, and I think being able to wrap up the budget quite soon would certainly help. As you rightly mentioned, we also have concerns around policy uncertainty around, for example, not just the tax hikes, but also potential tariffs that might be added to our exports. And I think there it's really around how do we improve the diplomatic relations between SA and the US, because these kind of things would play a big role in terms of bring back confidence, bring back certainty, and also helping consumers and businesses to understand and to continue to and support them so they can continue to grow the economy.
So much more to think about on this. Thank you very much indeed. Emile du Plessis is the Executive Head of Behavioral Economics and Economic Insights at Standard Bank. We'll talk about how you manage an office when no one's over there. That's next. You with The Money Show, 7 o'clock.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
7 minutes after 7, The Money Show with Stephen Grootes, brought to you by ABSA CIB, proud sponsor of the Bonds, Loans and ESG Africa 2025 conference from the 25th to the 26th of March at the Cape Town International Convention Centre. Welcome to the second hour of The Money Show. I'm Stephen Grootes. Talk more about managing people who are not in the office. So many people aren't, and just how you manage that. And it's one of the big sort of themes, one of the big issues we've actually discussed over the last few months on The Money Show. It's interesting to me how big an issue this still is. It's not surprising, I suppose, if you think about it, because it's been probably the biggest change in work in probably 50, 60, 70 years, maybe since the introduction of the sort of personal computer. And so it does just show you how big a change it is. But still, kind of 5 years on from the beginning of 2020, and this is still a big conversation that people are having. We'll hear from Wendy Nola, our consumer ninja. She's been talking and is talking about BMW and a particular incident, but really it's about what happens when you have an interaction with a salesperson and you don't actually get what you were told you were getting. That's, I think, one of the more interesting questions. Happens all the time. And then don't forget Shirley Machaba, the CEO of PwC in South Africa. She's your shapeshifter this evening, and we'll talk to her about her journey, what it's been like, what is changing in accountancy, and what isn't. I mean, It's interesting because I remember when I was much younger, so many people said you should go and be an accountant. You'll be sort of set for life. And many accountants clearly are. But in a world of AI, and when AI sort of gets hold of numbers, I don't know if it's going to be like that anymore. There may be a huge demand for a smallish group of people who have a very high functioning understanding of accountancy to design the software. But the numbers of accountants that we see now, I don't know if there'll be a need for. I mean, maybe she's going to tell me I'm smoking my socks, but we'll see. I look forward to that. Your calls as well this evening, perhaps on cannabis. 011 883 0702 and 021 446 0567. Your voice notes as well on 072 702 1702.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
I don't know about you, but every time I go on LinkedIn, I see some kind of advert for work from home. You can make money, you can make dollars, you can do this if you work from home. And I often think to myself, okay, that may be the case, but someone somewhere has to manage this and has to manage these people. And I've spoken to groups of people where I've sort of realized halfway through that, in fact, maybe these people don't know each other very well because they're never in the same office together. If you're not in the same office together, how do you create any kind of culture? How do you do anything? How do you even manage, people who are having a bad day? How do you know if someone's having a bad day? So many questions come out around this. Unotida Nyoni is an executive coach and CEO at Grand Scale. Unotida, good evening to you and thanks for your time. It's quite a big question. I think plenty of people around the world are still wrestling with this. And the fact that so many American companies are saying people need to stop working from home and come back in suggests maybe we haven't quite nailed it yet.
Good evening, Stephen. Yes, you're right. It's quite a complex one, but definitely can be managed if the leaders that are working with remote teams are able to communicate clearly. That's the first thing. And I think sometimes by communication, we don't mean just speaking, but actually listening and allowing the team to speak to the leadership as well as the rest of the team and engage with them in ways that make us kind of connect. And that means sharing both personal stuff and work stuff as well, and making that room for that in the meetings that we have. I think that's one of the key things to think about when we engage people remotely.
I mean, communication obviously becomes so much more important. You can't see the visual cues. You can't walk in and see the person in front of you or sitting opposite you who's clearly had a bad morning. You can't see those things. That means you have to, I suppose, communicate far more. You have to put quite a lot of effort into it.
Absolutely. So one of the things I encourage leaders to do is to make it in such a way. So if you are having weekly meetings, for example, make it such a way that checking in is a very important part of that meeting. But checking in is not just, how have you been? Let's ask specific questions. What was your high? What was your low last week? How are you feeling now? And let people be able to express. And I think if you do it on a weekly basis, one might dodge that once in a while, but when they now find that you are opening up and allowing vulnerability, and you yourself are opening up and allowing that vulnerability, then they're able to be courageous enough to share whether their day is going well or not. And I think that's part of communication for sure.
I was going to ask that because no one's going to actually share unless you share, which means you have to share first in a way that maybe you wouldn't have needed to do in the kind of physical working era or a physical working environment. You're actually, to get anyone to say anything to you, you're going to have to tell them something a little bit about you first. And as a leader, that's very scary.
It is. Vulnerability is scary. But when we lead with vulnerability, we deepen relationships because when you are risking just looking good and sharing that I'm human, it helps the rest of the team be able to share that too, and suddenly trust is now built. And some people meet physically all the time, and I train quite a number of teams that meet physically all of the time, but they're not as bonded as when a leader who knows how to at least be vulnerable can do online, to be fair.
If online's going to work, it has to work. No, Tita. I mean, do you need to actually invest quite large amounts in the sort of tech support that'll make it work? I mean, without that, nothing's going to happen. And I think so many businesses, when it started, and I don't blame them entirely, basically relied on the personal gadgets that people already had or the devices that people already had. You actually need to do that differently now, don't you?
Sure, but it doesn't have to be breaking the bank type kind of tech support for sure. The phone works. Definitely there's need for internet connectivity and a gadget like a laptop for people to connect. I would say to increase that visibility in many of the meetings we have using computers, maybe let's turn the camera on so that at least we get the feeling of that connection to make sure that's there. But once we have those, we are able to connect a lot better. Part of tech would mean maybe we're in the same comms group on the phone, but also we are able to track our work on certain tech platforms that also don't break the bank. There are just so many tools out there that you can use, your Slack, your Trellos, type of things that kind of help you to follow how people are doing with their work.
The way in which you communicate, by which I mean the method you use to communicate, can have an impact on how successful that communication is. And let me just explain slightly further what I mean. I find I'm on Zoom calls often, and I don't actually know from someone's face whether they've heard what I'm saying or not. And then I worry that they haven't. On a phone, because there's no lag on a normal cell phone, a good old-fashioned traditional cell phone conversation like this one, as difficult as they can sometimes be, I always feel I'm getting a much better, clearer, live understanding of what the person is saying and how they're feeling, just from the way they breathe, which is lost completely on Zoom. Is the way in which we're communicating something we need to focus on? Sometimes as a boss, maybe you need to say, well, I think this person's having a bad day. I'm not going to Zoom them or anything. I'm actually going to call them, as old-fashioned as that might sound.
Absolutely. And what happens when you do that call is that I think you also have changed the meeting mode from this is a business kind of conference where many other people can join, but if it's a call, it's one-on-one, right? And I think for people to connect with you, you can communicate and connect with them as a group, but there are catch-ups that are needed that are person to person, and on the phone it kind of helps connect a lot better. But even on Zoom, sometimes if it's just me and you, we might be able to get more of that because at least we can see each other as well.
Employee well-being becomes more and more important, and assessing that becomes harder. How do you do that?
Absolutely. So I think ensuring that there is a work-life balance, the same vulnerability thing we were talking about at the beginning, where when we are talking business, can we also make space in our conversations to know how people are doing personally? And when we are vulnerable about our personal stuff, and actually not just vulnerable, open about our personal stuff, it gives others the permission to know that for me to have that balance, I need to have both the work stuff and the personal stuff. And I need to report on both anyway, so I might as well invest in both and not make it a business-only kind of conversation at all times.
The way in which we do this is going to evolve, and going to evolve quite strongly. Do you expect it to still evolve as quickly as it has?
It definitely is going to keep changing. It definitely is going to, the modes and how we use, with the way technology is going, you can't predict in 5 years from now what mode we're going to be using. But what you can definitely predict is how people are able to connect. Vulnerability is not going to change. Trust is not going to change. Helping people get over their fear of conflict is not going to change. You are able to at least either train or show up as a leader in ways that help people connect better, no matter what form of tech they are going to be using to make that work.
Thank you very much indeed. Unotida Inyoni, really appreciate the time. Executive Coach, CEO at Grand Scale.
The Money Show.
Consumer Ninja.
Well, I don't know if you've had this problem where you walk into a place, someone's going to sell you a car or something. Could be anything. Could be a lounge suite. Could be a fancy new device of some kind. Sometimes it happens on the phone, but when you go face to face and someone promises you things, and the gap between what they promise you and what they actually give you is what Wendy Nola, your consumer ninja, is looking at this evening. And I'm particularly interested in cars because it's face-to-face. There's no proof of anything. Well, Wendy Nola joins us now. Wendy, good evening. You spoke to someone. They've asked to be called Frank. They wanted to buy an X3. It's a BMW car. What happened?
So he goes into the showroom, the mainland showroom, BMW showroom. The salesperson attends to him, as they do very quickly. He was interested in an X3, and they went for a test drive. And he says the salesman, it was man, explained all the features and the functionalities to him. And here's where things get a bit murky. The salesperson, he said that all the nice-to-have features were part of the deal. Now, anyone knows cars, most of the luxury German brands, they have the base and then you've got to pay extra for all the nice-to-haves, right? But he said, the salesperson was saying it's a special offer. They're selling out fast. They're going to be new models next year, but they might not, they probably won't have this inclusive deal. And so he says, I made the decision to buy the car because I thought that would be cost effective. I wouldn't have to pay for all the nice-to-haves as extra. So that's what happened. And you can imagine it's a pretty compelling sales pitch. Yeah.
So it's the beginning of the story. Clearly, it's not the end of it. So for example, so I think there's a BMW app you can have on a phone, things like that get loaded on. What happens after that?
So he says he specifically said to the salesman which features will terminate down the line, or when the car is paid up, or is there any strings attached? And he was told absolutely not. He says he did not mention anything about the features terminating anytime soon. And so, he was clear that he specifically queried that. But, as you can imagine, that's not what happened. A few weeks ago, so in other words, into month 4, after 3 months of enjoying these features free, he tried to use one of them, I think it was driver assistance, and he got a very rude notice, Stephen, saying, not possible. So he contacted the salesman, who said, oh, that's strange, I'll investigate and get back to you. And the upshot was, according to Frank, he said, it seems to me that those promised features were used strategically by the salesman, who intentionally and knowingly misrepresented them to sell the car by hook or crook. Those are Frank's words. Fast forward to the 10th of March. Frank got a response from the dealership saying that the connected drive features were not standard on his model, which was the base G45 X3 20D X-Drive. He had been given free access to them as a 3-month trial. How's that for a lure?
Sure.
After which he'd have to pay for them either by the month or by the year or indefinitely, which is what he thought, or he was told he was actually getting.
I'm sure in euros once you do the maths. Okay, so he didn't get what he was told he would get. And this is the key thing in this. He was told that you're going to get X, Y, Z, and instead he got less than that. He got A, B, C. What happened when he tried to take it up?
Well, he was told essentially that this is what it boils down to. They were unable to prove or disprove what that salesman had told him because it was a face-to-face verbal conversation, and the only thing that stands as documentation of what he was sold was what was in the contract, and those things weren't mentioned in the contract as being freebies. Interestingly for me, he said the salesman, when all this came to light, didn't dispute what he told Frank, which is the part that I found quite strange because normally they do, knowing that there's no proof. So just to give an idea of the cost of actually getting these things, just the parking assistance function would cost Frank 6,500 rand. So he was obviously pushing back. He wasn't getting any joy, and so I took up the case with I didn't go to the dealership. I went straight to BMW South Africa, the head office.
Okay, so you went basically to the boss, and that's your job. And what did they say? Because, I mean, I find it fascinating, just as an aside, and I'm happy to take an angry call from anyone on this, that some of these features would seem pretty standard. I mean, parking assist, if you advertise it, should be there. But anyway, that's the way BMW markets their things. It tells you, it reminds you of how careful you've got to be with the small print here. So you went to BMW, and what did they say?
So this was a base model. So as you go further up the chain, you're paying more and you get more of the nice to haves as standard. So anyway, so I had quite a bit of back and forth, but essentially the latest I heard was that the dealer principal of that dealership was going to speak to Frank, and they've agreed to pay for the park assist professional, because I said you must at least pay for one of these nice to haves that he suddenly is told is not possible, contrary to what he was told by the salesperson. I checked in with Frank, and he said I went to the dealership this week. They checked functions that were not active or had been suspended, because another one has since been suspended. He asked for my login details to enable the dealership to make payment of those suspended features. I was told they would be activated by Thursday, and I will keep you posted. That's tomorrow. I'm pretty sure he's going to get quite a few of those things, and given him the benefit of the doubt. But this is a classic case of what can go wrong when it's just verbal.
So I mean, I have not much sympathy with the salespeople here, because Stephen could go into a dealer, come out later and say, no, but you claimed this, that, and the next thing, when in fact the salesperson didn't. So they do need to be a little bit careful here. I can understand that, and I think that seems sensible to me. This is all about the interaction between two people who are face to face, and you don't want to get into a point where that kind of thing now has to be recorded for, quality control purposes.
Yes, but unfortunately, that's kind of the way things go. It's like, how often do you see GoPro footage or what do you call the ones in the car? The front of the dash cam,
yes,
as proving what actually happened in an accident or whatever. So I say, never blindly trust what a salesperson tells you, whether they're selling you if it's face to face, whether it's a gym contract or a car, or whatever the case may be. I get a steady stream of these, Stephen, especially with cars. They say it's an X model and actually the base model, or they say it's a 2022 model and it's actually a 2021 model. All those kinds of things. So if they say lovely, because we like to get knowledge or information verbally. It's easy for us, right? Read the document, read the contract, the offer to purchase, or whatever the case may be, and specifically look for what you were promised. Look at those details, the extras, the dates, the spec level, the model, and if it's not there, make them put it there. If it's an extra, such as the Frank promise, or I would say, at least, get out your we've all got recording mechanisms on our phones. Say, Kate, would you mind just whatever? If they refuse, you've got all the information you need. And I think we just normalize this behavior and not be so blindly trusting.
Oh, it's kind of, you're right, Wendy, but it's sort of horrible, isn't it?
Exhausting. I know.
I can't help but feel, and I'm trying not to make a comment about second-hand car salesmen, and this isn't second-hand, but
yes.
you would think that it's in the interests of the dealer, and in this case, fair play to the person, they did not deny it, and that's very important to remember, but the dealer also has an interest in making sure their salespeople play it straight, and nothing, and particularly in that game, a reputation rarely matters.
Absolutely, and I think... Well, the cynic in me says when you know that there isn't any proof of the face-to-face sales process, and that your customer will have a very hard time, if impossible for them to prove what they were promised wasn't what they got. Do you have an incentive to have oversight there? Well, maybe not, but I think that's what should happen. And Frank made the point. That, maybe they should be insisting that those interactions are recorded in some way so that the salespeople are not have no incentive to embellish what the offer could be in order to close the deal and get their commission.
Wendy Nola, our consumer ninja. Thank you very much indeed.
The Money Show.
Shapeshifters.
Well, your shapeshifter tonight, someone who's certainly made a mark in the world of accountancy for all sorts of reasons. Also an interesting person to ask about the future of the profession of accountancy. Shirley Machaba is the CEO at PwC in South Africa and also the Southern Africa Senior Regional Partner at PwC. And she's agreed to spend some time with you on The Money Show as our shapeshifter this evening. Shirley Machaba, good evening, and thank you so much for taking the time to speak to us tonight.
Evening, Stephen. Thank you for having me, and evening to the audience for the discussion.
I need to start with some honesty. Accountancy doesn't grab all of us, right? I'm one of the people it did not grab. When did you first realize that numbers clearly have something that grabs you? I mean, did it come very young? I mean, did you sort of realize early on that actually you were pretty good at numbers?
My story is really a story of resilience, Stephen, in the sense that I never, aspired to be a chartered accountant. My aspiration was to be a medical doctor. So, because I've done, science and maths at high school until matric. The only time when I decided to change to accounting, it's when I was told at the local university that, the quota system for, science and maths students or BSc has been reached. So the next question for me was, I really want to be different. I don't want to just do degrees for the sake of doing degrees. So what is the next, advice they can give me? And the advice was that maybe you should consider BCom accounting. So, yeah.
Sure. Was that a quota system on race or a quota system on gender or both?
No, it was not necessarily to do with race and gender. It was just the numbers.
Oh, I see. Okay.
Yes.
You started at the Jabavu Primary School in Soweto, and you went to high school in what was then Venda, and we're going to come back to that in a moment. But first, when you were quite young, as I understand it, in fact, your grandmother played a very big role in your life with your siblings. I would imagine that it would not have been an easy time, and it would have required quite a lot of determination to get everybody through school in those days.
Exactly, Stephen. I was definitely raised by my grandmother in Soweto. So the people that I really grew up with in that household, it was not necessarily my siblings, it was my cousins. Because at that time, I was the only child from my parents. So my parents were working in Limpopo. So you are very right to say it was not an easy ride because my grandmother fell ill. And as the elder granddaughter, I had to make sure that, all the household chores are done and dusted. But I had a strategy in place because I would delegate some of the chores. Yes, I will do some of them. So that's when I realized at an early stage that really that experience taught me how to be independent, the work ethics that are good. So the value system as well of really working hard.
And organization at a young age as well. I mean, it would force you to be organized, and that's really important.
Exactly.
You went to high school in Venda. So you did primary school at the Jabavu Primary School in Soweto, as I understand it, and then for high school, you went to Venda. Was that a boarding school, or were you joining your parents there?
Not really. I continued to be raised by my grandmother at a village. So my mother just decided at some point that maybe I must be moved from Soweto to, the village. So I continued with my granny that side. So it was not a boarding school. It was a normal school. I had to walk to school.
Okay. So you studied at the University of Venda, you studied at UNISA, you studied at Duke University in the end. But one of your first jobs was at the Auditor General's office. And I was wondering about how long the Auditor General, as we understand it now, how long that office had been going when you first started working there, because so many things were changing in our society at the time.
Yeah, so the Auditor General's office that I worked in was the Auditor General in Venda. You will remember that time, we had TBVC states. So while we had the Auditor General in South Africa, but we also had, Auditor General in Venda. So I started my career there as an as an external auditor. And I progressed through the ranks until I became a senior internal auditor. So they had a program where if you want to follow CA route, because by then I was now clear that this is the route I must follow. So the program was for me to serve articles with the Auditor General for 1 year and then 2 years in a reputable firm. By then, reputable firms were 5. You will remember that, PwC is the combination of Pricewaterhouse and Coopers and Lybrand. Yeah, so, and the condition was that I need to join the Auditor General's office in South Africa. So that's how I did my 1 year with the Auditor General, and then I progressed to Coopers and Lybrand for 2 years.
When was this? Was this before or after 1990?
It was before 1990, of course.
Okay. For it to be a TBV state that was functioning, it would have to be. But I also understand from other people who've told me at the time, not everybody, but we've spoken to people, and I've heard, and I've listened to some of the stories slightly similar to yours, that some of those firms, white-owned firms then, wouldn't take young black people to do their internships. And that must have been quite tricky. Maybe some of them did, but as I understand it, some of them didn't.
So my situation was very different. You're right. It was not really an easy ride for black trainee accountants that time. But when I say my situation was different, it's because, the Auditor General was one of the key clients for the Big Five. And to your surprise, I applied to both PW and Coopers and Lybrand. I got admitted to both. Then I had to choose. So how I chose Coopers and Lybrand is because during my time in Venda, when I was now doing part-time lecturing at the University of Venda, Accounting 300, I was very close to the professor. Professor Viljoen is late now. He was one of the partners for Coopers and Lybrand. That's how I got inspired to join Coopers and Lybrand. So my journey during articles was really very different. Yes, you would have heard stories that that time, as a black trainee accountant, you might spend 3 years, considered to be, busy with articles, but your certificate is not necessarily having anything in terms of being exposed to clients, different industries. Again, I was very fortunate, and I'll tell you why. My intention was to learn as much as possible, and I adopted a positive attitude because traineeship is not easy. You do a whole host of things in addition to really serving clients. If you're not planned for a day, you can be asked by a partner or whoever to make tea, to go and print, to go and do whatever. But because of my positive attitude, accepting whatever responsibilities, for example, I remember when I was now called a bank and cash specialist, because all the time when I'm being planned, it will be bank and cash. But, I really made sure that I do my work diligently and with passion. And the partners and the managers realized that this one is, her work ethics is very good. So they started giving me a lot of work. I can tell you that I'm one of the few black trainee accountants that time who were exposed to different industries, and you name it, the financial services, central banks, and not even in the country, even outside the country.
Professor Wiseman and Kuklu, I'm sure you know him.
I know him.
Was I think a little ahead of you. And I can't recall if I've got this right, but he also spoke to us a few months ago about an intervention made by a professor that mattered. Now, it might also have been a Professor Viljoen. I can't remember. I almost wonder if it might have been the same person.
I'm not sure, but Professor Viljoen was based in Limpopo, Luitergat to be specific. He was running a sort of a satellite Coopers and Lybrand office there.
Interesting. Are there people that you worked with from that time that you still see in the industry? And I ask this question because I'm fascinated. One of the things that you sort of, from where I sit and I speak to people about their careers, is that you can see how people bump into each other. There's someone I interviewed on the program tonight that I was at university with, for example. Are there people from that time that you still see in the industry sometimes? Is there a sort of group of people who you kind of knew? Maybe you bumped into them in the internship. Maybe you bumped into them in a room somewhere and you still see them?
Not necessarily in the internship, because majority of particularly black trainee accountants that time, they didn't really get the exposure that I got, and some of them just left after articles, whatever. So that's why I'm still here, because I enjoyed every moment. So the people that I bump against, it's really people that were maybe my classmates. One person that I can remember on top of my head is Drieselmann, the financial director for Vodacom.
Well, I can just imagine how someone like that you would follow very closely. Shirley, you spent some time at the Justice Department and then you moved into PwC, and I think that was about 20 years ago. That move from government to the private sector, was that quite a change? I mean, I think the difference between government and the private sector is much bigger now than it was 20 years ago. But was it quite a difference then?
To be honest, Stephen, it was not necessarily a big difference, in the sense that even if I joined the Department of Justice, by the way, I was the very first person to be appointed head of internal audit because of the PFMA. So, and
I didn't know that. That's fascinating. Yes.
Yeah, my role was to establish the internal audit unit, meaning that being the very first person as the head, I need to really choose the resources that I need. So I was so fortunate that, building that unit, I had to bring resources that are more in the profession. For example, those who finished their articles. So, from that angle, the culture was really seamless with what I know. I remember very well that time, the DG by then kept on saying to me, Shirley, I really like your department, because you guys are not necessarily operating like a true public service unit. So the culture was very different. And that's why even when I decided to rejoin PwC, it was seamless for me. And by the way, during the time when I was heading up internal audit at Justice, it was a very big department. It's a national department, so I had to really make sure that part of my establishing a very effective internal audit unit, I had to bring the service providers. So you will tell that as soon as you start working with the service providers, you're using their methodologies and all those. So it was seamless.
We're speaking to Shirley Machaba. She is your shapeshifter this evening, CEO at PwC in South Africa and the Southern Africa Senior Regional Partner.
The Money Show.
Shapeshifters.
Shirley Machaba, CEO at PwC in South Africa and Southern Africa Senior Regional Partner, your shapeshifter this evening. Shirley, I have a few questions about accountancy, if I may. And I mean, the profession's been through one or two interesting times, and I've often wanted to sort of ask this question to someone, because I remember during the state capture era and immediately afterwards, one of your competitors, KPMG, they were involved in some wrongdoing. And in fact, we've spoken to Professor Nkuklu about that. He helped to clean that up. But you were in the industry at the time, working for a completely different company with PwC. Did you worry a little bit about the image of accountancy as a whole? I think that some people at SAICA, the Southern African Institute of Chartered Accountancy, were quite worried. Did it worry you a little bit that even though you had nothing to do with this, just your profession, when something bad happens in the media, I worry about my profession. Did you worry about your profession a little bit when all of that stuff started to come out?
Indeed, I'm sure almost everyone in the profession got worried, because, all the time you are a member, you are, presenting yourself somewhere, they just link you to what is happening. So yes, definitely it worried me.
Do you think the profession has responded adequately? I mean, I saw some workshops, I saw some work. I think people tried quite hard to restore public trust. KPMG went through its own process, a very impressive process. We had the Zondo Commission, so it's all we all know where we are. Do you think it's recovered properly? I mean, is that public trust back in accountancy? And I know there's always a scandal. We can talk about Steinhoff, and we can talk about the sugar producer, Ilovo, all of those things. But I mean, do you think that accountancy still has the public trust it needs to have to operate properly?
So I can tell you that the profession has worked tremendously, tirelessly, around making sure that there's restoration of public trust. Because you'll appreciate that, this profession plays a critical role in the economy in the country as a whole. In fact, I must indicate to you that globally we are really recognized compared to the other CAs across the globe. So there has been a lot of work that has been done. I know that, the senior partners meet on a regular basis immediately after that whole, loss of public trust. They had different meetings where they're working on a list of recommendations to say this is what we're going to be doing. And I can't remember the number of recommendations, but one of the key recommendations to really help in building the trust or restoring the trust was, talking about ethics. This ethics, it was not necessarily going to be starting at university or at, when you are now at your early age of your career. The recommendation was that this ethics need to start, from high school level, if possible, so that at least, there will be that culture of ethical behavior. So, as I say, there were a lot of recommendations. And, the other recommendation was around really managing the client's expectations or stakeholders' expectations. Talking about stakeholder expectations, it's really more, if you look at what happens all the time when something happens, something goes wrong in the organization, the very first people to be blamed is auditors. And really, it was more around educating our stakeholders as to what our role is. I know that even the regulators, they had to come in, not only the audit firms, they had to come in to help in creating or creating that awareness, educating the stakeholders so that they understand that there's a whole host of, it's a whole value chain when it comes to what went wrong in an organization. So the profession is really working hard and making sure that, we know there's a lot of challenges as well. And that one of the challenges because of all these things, it's the attractiveness of the profession. If you look at the younger generation, the appetite to the profession is, starting to really, reduce because, we always focusing on quality. Quality for us is number one. And for us to maintain that, we have to have a lot of inspections, whether from the regulator, locally, from, the regulator globally, particularly with the big firms, the internal inspections and whatever. So if you count all those things, it's a lot. And the other thing that is really making the younger generation, becoming less interested in the profession is really the over-regulation as well. The fines that are really coming up with if maybe somebody fails a quality review. So the profession is making sure that, we come up with plans to ensure that we still have the critical mass in this profession.
I mentioned some examples and I said Steinhoff and I said a sugar producer. It wasn't that sugar producer. It was, of course, Tongard and Steinhoff. I do want to ask a little bit about the future of accountancy, and let me explain what I mean. I mean, everybody talks about artificial intelligence and it's, going to change this job or that job, or it's going to remove a need for that job. And it seemed to me that what might happen with accountancy, and I want to sort of ask you this, is that at the very top of accountancy, if you're going to have artificial intelligence and numbers, that you will need very clever, very educated people, very well-paid people to kind of manage those AI models, right? And so there would be a demand for those people. But the number of accountants that we have now, do you think we will still need as many in an AI era? And where I'm really going with this is, do you think there will be enough space in the world of accountancy for the younger people who still want to study it now?
There will definitely be a need, Stephen, in the sense that, as I said, I didn't use the word, the profession is also evolving. So you will know that amongst the mega trends, advancement of technology and AI, it's really with us. And if we don't evolve, we are going to be remaining irrelevant. So within the auditing and accounting profession, we embracing those technological advancements. We are making sure that we upskill our people. I will tell you from PwC side, it's really embedded in our strategy. It's one of the strategic pillars to say we are going to leverage off technology because we already invested and we're keeping on training our people so that at least they are geared up so that they are fit for purpose. So the auditing of today is not necessarily the auditing of yesterday. And obviously in future, we see ourselves using a lot of technology, AI, whatever. So there's definitely space for accountants and auditors in the profession, irrespective of the technological advancements.
Shirley, thank you very much indeed for spending some time with us. I really appreciate it. And I know talking on the radio is different to accountancy, and you can see that I would be a terrible accountant. But I really appreciate you taking the time, and thank you so much for coming on tonight.
Thank you so much for having me. I appreciate it.
Shirley Machaba, CEO at PwC for South Africa and Senior Regional Partner for PwC in Southern Africa. Your shapeshifter on The Money Show tonight.